Why? And it's because those 8 banks are being instructed by the people above in the West to keep it down for a reason. And maybe it is to fund the military-industrial complex. Who knows? Point of it is that all manipulations end badly, especially when you see massive efforts by countries like China and India to accumulate everything that's not nailed down, and even do so in a clandestine manner by buying doré and concentrate from the miners that doesn't come off of an exchange, that isn't reflected in the price, so that they can have a strategic advantage that no one sees coming.
The strategic importance of gold and silver is growing as countries, particularly in Asia, increase their reserves to strengthen financial stability. Andy Schectman, CEO of Miles Franklin, notes that this rising demand highlights the enduring value of these metals amid global economic uncertainties. Exchanges like the London Bullion Market Association, LBMA, and COMEX are seeing significant outflows as nations and large investors withdraw physical gold and silver. Schectman points out that this trend is tightening supplies and raising concerns about long-term availability. Schectman also warns that large financial institutions are manipulating prices through extensive positions in gold and silver derivatives. This creates discrepancies between paper markets and physical assets, leading to increased volatility. For investors, Schectman suggests that directly holding physical gold and silver offers a hedge against inflation and currency risks. As market distortions persist, securing tangible precious metals may be a wise strategy for preserving wealth. Now we'll show you the best clips of the latest interview, but first smash the subscribe button, hit the like button, and turn on notifications so you do not miss out our daily recaps.
A common currency. And that these countries would need, of course, then they would need a central bank, and presumably be held in China, which is an unacceptable loss of sovereignty, especially between countries like China and India with territorial conflicts. And well, you have the head of the BRICS New Development Bank who made it clear there are no immediate plans to create a common currency, which I agree. And even if they were willing to put aside their differences, it's hard to see what competitive advantage would ever have between to the current system. And then they talk about a gold-backed yuan or all. And they always go back to the Eurodollar system, and that we left the gold-backed system to go to the Eurodollar system because it was such a better system. And contrary to what people say, we had gone I think 180 years with no inflation and the greatest growth that the world has ever seen in a country by being on the gold-backed system. But I've been reading a lot of this lately, talking about this common fallacy is that there won't be a common currency, and maybe there won't be. And if you look at what they're proposing right now, it is not a common currency. They are proposing everyone having their own central bank digital currency, having their own monetary autonomy. That's number one. And if you look at the global GDP, and go 98% of all the gross domestic product of the world and the countries that represent that, every one of them has a CBDC in operation or development. That's number one. If you look at what's been done over the last year, all of these countries are trading in local currencies. They're trading rupee for ruble digital. They're trading yuan for oil. And that yuan is convertible into gold in the Shanghai Gold Exchange. And all of these local currency tradings that are being done instead of the dollar is first and foremost. Project Mbridge is a vehicle or a platform to allow these countries to seamlessly trade back and forth with one another without interference of the SWIFT system. No Western intermediary banks. The dollar is not compatible with Mbridge. And Saudi Arabia just became a full participant in Mbridge. And what they are attempting to do, at least that's what Dilma Rousseff said, the head of the BRICS New Development Bank, former president of Brazil, is that we've agreed in principle to a common settlement currency. It is not a common BRICS currency. This is where people are going astray. They don't have to have a common currency in order for this to work, but a common settlement currency that is pegged 40% to gold and 60% to BRICS plus currencies eliminates the need for a common currency. Each country will have their own system, their own CBDC, their own monetary system, their own little economy that they have to manage and do so in a prudent way. They will not be reliant upon having to go back and forth in and out of dollars to transact with other countries and stand to the KYC and AML problems, the anti-money laundering and know your client, and the cost and the inefficiency and the time, when they can have a common settlement currency, which is addressed by having the gold held within this ecosystem. These unit tokens that they mint are held within the borders of the countries that possess it. They don't even have to send it to a central authority and have it independently and continuously audited. So when we talk about these fallacies that keep popping up that underestimate the relevance of what is happening, this group that is forming, I think they are grossly underestimating the intelligence and the sophistication of these countries who understand exactly the pushback. And instead of making a common currency with a common central bank, everyone holds their own autonomy. But when it comes time to settling, if I got too many rupee or I have too many ruble, I want the common settlement token. Well, that's gold. And that's gold's role. And that's why the BIS reclassified it tier 1. And that's why all the countries have been bringing it home, because it will be part of a new system. This is really important for people to understand. And I think it's a trend that's growing. It's literally accelerating. And you can see it in the price of gold. Well, one other thing I'd like to mention, a lot of people say, well, okay, fine. If all of these countries are accumulating gold, what does it mean for silver? And there are some very important things to understand about silver. Number one, first and foremost, China is the number 2 largest producer of silver in the world. And they, for many years, have been a net exporter because they mine all of these other metals. And if you remember, silver is largely a byproduct metal, where in North America, or I guess in all of the mining companies out there, only account for about 25-30% of the silver that comes to market.
In today's news recap, China's strategic silver takeover, a calculated move to drain the West, China hoarding silver, price 10% higher than West, secret weapon or economic warfare. While the world has been focused on the geopolitical tensions between China and the West, a more subtle battle has been unfolding in the markets. China, through a series of calculated moves, has been quietly accumulating vast quantities of gold and silver. This move has signaled a potential shift in the global economic landscape and highlights the developing countries' need for exorbitant amounts of resources. In addition to its gold hoarding, China has also been strategically increasing its silver reserves. The Shanghai Metals Exchange has seen a significant surge in silver trading volume, with prices consistently higher than those on Western exchanges. This suggests that China may be deliberately driving up the price of silver to drain the West's resources. The rising price of silver could have significant implications for Western economies, particularly those that rely heavily on industrial metals. If the price of silver continues to rise, it could increase production costs for a wide range of industries, from electronics to solar panels. This could lead to higher consumer prices and a further slowdown of economic growth as China outproduces the West in electronics and solar panels. Silver imports are notably increasing under Chinese President Xi Jinping, and most recently have spiked in June and July, with both months surpassing net imports of more than 400 tons. Last year at this time, the net importing of silver into China did not surpass 200 tons. U.S. President Joe Biden and his administration slammed China's trade practices in a memo released in May, claiming its over-manufacturing of solar equipment is harming the West. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, hit the like button, and turn on notifications so you do not miss out our daily recaps. Enjoy the episode.
Most of it comes as a byproduct of mining other metals. So China and their smelters had tons of silver for years. They would export it. As of this year, they have now become shifted from net exporter to net importer. And it's been driven by increased imports and also by, rebalancing their domestic market and not sending out all of this silver that they've been accumulating as a byproduct of other endeavors. And this, first and foremost, is really, really big. So the number 2 producer of silver in the world is now a net importer instead of a net exporter. And then all of the talk, I've done 2 interviews recently with mining executives, and both of them have said the same thing, that they are going around the world, China is, and in particular in Latin America, paying double what the West will pay for unrefined doré and silver concentrate, bringing it home and refining it there, and doing so that it doesn't come off of an exchange and affect the price. And so you have a massive drive by China and India. We know, we've documented all of their accumulation of silver to accumulate silver too. And China is going to great lengths to hide it in terms of how much they're producing and how much they're going around accumulating in unrefined forms, because it doesn't reflect in the price. Silver will have its day, and I think China is a perfect example of it. They do things thinking in terms of years and decades. We think in terms of minutes. But when, one of the biggest exporters in the world goes to net import, and they're already the number 2 largest producer in the world, it should tell you where silver ultimately will go. It's not tier 1, but it's strategic. It is not an industrial metal as we are led to believe. It's a strategic metal, and it is needed. And the countries of the global south are understanding that. And this is why they're draining the LBMA to the second lowest level they've ever had in the history of the exchange, 140 years. This is why they're draining the COMEX. This is why the others stand for delivery. We've talked about this for years, and they have been doing it very methodically and very opaque in their manner, not transparent. And I think it's accelerating. So silver will have its day, and everything that we've ever talked about silver, I think, will happen in spades. It'll just happen in a manner, it will go from 0 to 100 just like that. We'll wake up and see it repriced or to a whole different level when there just isn't the ability to accumulate it on the exchanges, which are being bled dry. And at some point, all of the people who have silver that would otherwise sell it, they're not going to sell it at the Western price. It will be sold at a price far higher, and probably a price that is then revalued or controlled by countries like China, who, as it is right now, are selling it for $4 an ounce higher in Shanghai. What if it was $40 or $400? It's the same thing as us talking about revaluing gold, where Senator Loomis for Wyoming can say, yeah, I like Trump's idea of the strategic Bitcoin account. We should do that and fund it partially by revaluing our gold that's held by the Fed. Well, there you go. I mean, it's one thing for the Dutch National Banker, the head of the Dutch National Bank, to say, yeah, we're going to revalue gold because it's in the gold revaluation account, and it should go much higher to offset our liabilities. But when you see Senator Loomis from Wyoming saying, yeah, we should do this to fund a strategic Bitcoin account, what's the difference if the West revalues it or China revalues it? In essence, a $4 premium to the Western price already is the beginning of a revaluation. So I would say silver is still the most undervalued, probably best potential asset on the planet, regardless of how maddening it has been for the past few years in terms of its counterintuitive price movement and its volatility. If there weren't, and I'll keep going back to the chart Ed Steer put on your show, It's incredible. People understand that there are 8 banks that are holding the largest concentrated position of any commodity ever traded on COMEX in silver. Why? And it's because those 8 banks are being instructed by the people above in the West to keep it down for a reason. And maybe it is to fund the military-industrial complex. Who knows? Point of it is that all manipulations end badly, especially when you see massive efforts by countries like China and India to accumulate everything that's not nailed down, and even do so in a clandestine manner by buying doré and concentrate from the miners that doesn't come off of an exchange, that isn't reflected in the price, so that they can have a strategic advantage that no one sees coming.
What do you think of Schectman's take? Is he correct? Will price manipulation end very soon for gold and silver as banks collapse, or will America be just fine? Post in the comments section down below your honest opinion and share with the stackers your plan. Now watch this video right here because it's a perfect fit for you. I'll see you on the other side.